Pay close attention, because what I'm about to share could completely transform the way you view your money, your investment portfolio, and your financial future. I'm Kevin Alry, and I don't waste your time with fluff. I deal in facts, numbers, and actionable strategies to grow wealth. Right now, there's an opportunity right in front of us that most people are completely overlooking. We're talking about gold. Now, before you dismiss this as another dull discussion about a shiny metal, let me stop you. Gold is on the verge of a surge unlike anything we've witnessed in our lifetimes. If you're not paying attention, you could miss one of the biggest wealth preservation and wealth creation opportunities of the decade. But before I explain exactly why this is happening and what steps you need to take immediately, I need one thing from you. If you want to protect your money and grow your wealth, subscribe to this channel. Hit that button and become part of this community. We're building an army of smart investors who understand that knowledge is power and that money rewards speed. So, subscribe, turn on notifications, and let's explore this together. Now, a little about me. I've been investing for decades. I've built businesses. I've sold businesses. I've created wealth. And yes, I've lost money as well. That's part of the learning process. I sit on Shark Tank and hear thousands of pitches, so I know what works and what fails. One lesson I've learned over all these years is this: when the fundamentals align, when economic indicators start flashing warning signs, when governments begin making reckless decisions with money, that's when you must pay attention. Right now, every alarm bell is blaring. The fundamentals for gold are stronger than they've been in half a century. Let me explain this in a way anyone can understand. Gold is not just jewelry. It's not just something your grandmother kept locked in a safe. Gold is money. It has been money for 5,000 years. When empires fall, gold endures. When currencies collapse, gold endures. When banks fail, gold endures. It is the ultimate store of value. And today, the world is realizing this truth all over again. Here's what's happening. We are living through the largest monetary experiment in human history. Governments around the globe have printed more money in the past few years than in all of recorded history combined. Think about that: more dollars, more euros, more yen, all created out of thin air than ever before. And what happens when you flood the market with anything? Its value drops. It's basic supply and demand. When too many dollars chase too few goods, each dollar loses purchasing power. That's what we call inflation. Inflation is a silent thief that slowly erodes your wealth while you sleep. Central banks will assure you that they have it under control. They'll claim inflation is temporary, manageable, and that they will fix it. But let me be clear about central bankers: they are not your allies. They are not looking out for your interests. Their goal is to prop up a broken system, to keep the plates spinning for as long as possible. But eventually, the music will stop. And when it does, those holding paper currencies will suffer the most. Those holding real assets, like gold, will be protected. Let me put some numbers into perspective because I deal in numbers. Right now, gold is trading around $2,000 an ounce. Many people look at that price and think it's expensive, feeling they've missed their chance. But in reality, we are only at the beginning. When you adjust for inflation and consider gold's real purchasing power compared to decades ago, it is actually undervalued. In fact, if gold were to reach the same inflation-adjusted peak it hit in the early 1980s, we would be looking at a price exceeding $3,000 an ounce. And I believe it will go much higher. Why? Because the conditions today are far worse than they were back then. Previously, only one country was printing money. Today, every major economy is doing it simultaneously. Back then, debt levels were manageable. Now, governments are drowning in debt. The United States alone carries over $30 trillion in debt. That number is so enormous that most people can't even grasp it. And it keeps growing every single day. How do you ever pay back that kind of debt? The truth is, you don't. You inflate it away. You print more money, which erodes the value of the currency. And that, my friends, is exactly what is happening right now. Now, I want to address something that almost no one else is talking about: trust. Money only functions when people have confidence in it. The dollar holds its position as the world's reserve currency because people trust it. But that trust is deteriorating. Countries across the globe are beginning to question why they are holding so many dollars. Why are they financing America's deficits? Why allow the US to print money and export inflation to the rest of the world? And they're starting to act. Central banks everywhere are buying gold at unprecedented rates. China is purchasing gold. Russia is stockpiling gold. India is accumulating gold. Even smaller nations that most people have never heard of are quietly building gold reserves because they understand what's coming. When central banks buy, you should pay attention. These are institutions with access to information that the average person does not have. They see the writing on the wall. They know the days of the dollar as the dominant global reserve currency are limited, and they are preparing for what comes next. If you're not doing the same, you're making a critical mistake. Let me share a story. I was having lunch with a very wealthy friend of mine, a billionaire who made his fortune in real estate and private equity. I asked him, "What keeps you awake at night? What are you worried about?" He looked at me and said, "Kevin, I'm worried about my cash. I'm worried that all the money I've spent my life building could end up worthless." So what is he doing? He's converting a substantial portion of his liquid wealth into gold. Not because he expects a quick profit, but because he wants to protect everything he's built. That is the mindset of the truly wealthy. They prioritize preservation first and growth second. Now, I know some of you are thinking, "Kevin, gold doesn't pay dividends. It doesn't generate cash flow. Why invest in something that just sits there?" That's a fair question. But consider this: what good is a dividend if the currency it's paid in is losing value? What good is cash flow if your purchasing power is being destroyed? Gold is insurance. It's a hedge against chaos. And right now, chaos is exactly what we are facing. Think back to the financial crisis. Stocks crashed, real estate collapsed, people lost their jobs, their homes, and their savings. But gold? Gold rose. It protected those who owned it. It did its job. And we are heading into another crisis, one that will be different, larger, and focused on currencies, not just stocks or bonds. When that happens, gold will be the only thing standing between you and financial ruin. But here's the key: you cannot wait until the crisis hits to buy gold. By then, it will be too late. Prices will have already soared. You need to position yourself now, while most people are still asleep, still trusting the system, still believing the false notion that everything is fine. This is your moment, your opportunity to get ahead of the curve. There's another factor driving gold higher: geopolitical instability. The world today is more dangerous than it has been in decades. Conflicts are brewing in multiple regions. Tensions are rising between major powers. Supply chains remain fragile. Energy crises loom. All of this creates uncertainty, and when uncertainty strikes, investors rush to safety. The safest asset in the world? Gold. Every time a major geopolitical event occurs, gold spikes. Every war, every crisis, every breakdown in diplomacy pushes people toward gold. Right now, we live in a world where the next significant event could happen at any moment. You need to be prepared to hold gold in your portfolio before it happens, not after. Now let's dive into what's happening in the market today. This is where it becomes truly fascinating. I'm going to reveal information that Wall Street doesn't want you to know. They want you invested in their products, their funds, their stocks, because that's how they earn fees. But I'm here to tell you the truth, because that's my approach. The supply and demand dynamics for gold are completely out of balance. On the supply side, there are serious challenges. Gold mining is not simple. Developing a new mine takes years. Mining gold costs billions of dollars, and the easy-to-access gold has already been discovered. We no longer find major new deposits the way we used to. The mines still in operation are getting deeper, more expensive, and less productive. What does this mean? It means supply is constrained, and it's going to remain that way. Meanwhile, demand is skyrocketing. I've already mentioned central banks buying gold at record levels. But it's not only central banks. Retail investors all over the world, especially in Asia, are purchasing physical gold. In countries like India and China, gold is deeply ingrained in the culture. It's a primary method for saving and preserving wealth. As these economies grow and their middle classes expand, the demand for gold will only intensify. Hundreds of millions of people are entering the middle class in Asia, and they will all want gold. Then there's institutional money, hedge funds, family offices, pension funds, the big players. For years, they largely avoided gold because the stock market offered high returns. Why invest in gold when you could make 20% a year in stocks? But that era is over. The stock market is overvalued, and future returns are likely to be mediocre at best. These institutional investors are now seeking alternatives, assets that aren't correlated with stocks or bonds. That's where gold comes in. Here's something most people don't realize: the gold market is relatively small compared to other markets. The total above-ground supply of gold in the world is worth roughly $12 trillion. That sounds enormous, but when you compare it to the stock market, valued at over $100 trillion, or the global real estate market. And that's just a fraction of the picture. The global real estate market alone is worth far more than gold. Compared to these massive markets, gold is tiny. When large sums of money start flowing into a relatively small market, prices rise quickly, very quickly. Here's an example: if just 1% of the global stock market's capital shifted into gold, that would be over $1 trillion entering a $12 trillion market. That represents an 8% surge in demand. What happens to the price? It skyrockets. And I believe that is exactly what's about to happen. As more investors recognize the risks in the financial system and realize their stocks and bonds are vulnerable, they will rotate into gold. When that happens, the resulting price surge will astonish everyone. Now, let's address the skeptics, the gold haters. They often say, "Kevin, gold had a terrible decade. From 2011 to 2020, it went nowhere. It was dead money. Why would I invest in something that can stay flat for 10 years? And you know what? They are correct, gold did go sideways. But do you know why? During that period, interest rates were artificially low, and central banks reassured everyone that everything was fine. People believed the lie and stayed in stocks and bonds. Now, that lie has been exposed. The emperor has no clothes. Gold is waking up. Since 2020, it has entered a new bull market, consistently making higher highs and higher lows. It has broken out of a decade-long consolidation. And this, my friends, is just the beginning. We are still in the early stages of what I believe will become a 10 to 15-year bull market in gold. Those who enter early are likely to build tremendous wealth, while those who wait will be chasing prices higher and higher. Now, let's discuss how you should invest in gold, because this is critical. There are several ways to gain exposure, and not all methods are created equal. The first option is physical gold. You can purchase coins or bars and store them yourself or in a secure vault. This is the purest form of gold ownership. No one can take it from you. It is not a promise from a bank or a government, it is real, tangible wealth. I personally own physical gold and recommend that everyone holds at least some. However, there are drawbacks: storage can be cumbersome, security is a concern, and selling requires finding a buyer and managing the logistics. The second option is gold exchange-traded funds, ETFs. These funds hold physical gold, and you can buy shares just like any stock. ETFs are liquid, easy to trade, and eliminate the need for storage. The downside is that you do not directly own the gold, you own shares of a fund that holds gold. In a severe crisis, if the system collapses, accessing the actual metal could become difficult. Still, for most investors in most scenarios, ETFs are an excellent way to gain gold exposure. The third method is through gold mining stocks. This approach can offer the highest potential returns, but it also carries the most risk. When gold prices rise, mining companies earn higher profits, and their stock prices often increase at a faster rate than gold itself. This is leverage in action, offering amplified gains, but also amplified risk. If gold rises by 50%, a strong mining stock could easily climb 100% or more. But the reverse is also true: if gold falls, mining stocks can be severely hit. Mining companies carry their own risks as well, including operational challenges, management issues, and geopolitical dangers if they operate in unstable regions. That's why you must be selective, choosing companies with excellent management, strong assets, and a solid track record. My approach is diversified. I hold physical gold as insurance, ETFs for liquidity, and carefully selected mining stocks for upside potential. This is how you capitalize on this opportunity properly. Don't put all your eggs in one basket, but ensure gold forms a meaningful portion of your portfolio. How much should you allocate? That depends on your personal situation, risk tolerance, and outlook on the world. That said, I believe every investor should hold at least 10% of their portfolio in gold and gold-related assets. If you are particularly concerned about the stability of the financial system and expect things to deteriorate, you could go as high as 20% or even 30%. But having some exposure is critical. 0% is no longer an option. The risks are simply too high. Here's what the smart money is doing: they are not waiting for confirmation. They aren't waiting for gold to reach $3,000 or $4,000 before buying. They are accumulating positions quietly now, while prices are still reasonable. By the time the general public realizes what's happening and rushes into gold, the smart investors will already be sitting on substantial gains. This is how wealth is created: get in early, remain patient, and let the market work in your favor. I want to highlight another factor that is going to push gold even higher: the death of the traditional 60-40 portfolio. For decades, financial advisors recommended that clients allocate 60% to stocks and 40% to bonds. This classic balanced portfolio worked because stocks and bonds were negatively correlated. When stocks fell, bonds tended to rise, and vice versa. But that relationship has broken down. Today, stocks and bonds often move in the same direction. When inflation rises, both can decline simultaneously. We've seen this recently, with portfolios suffering huge losses because there was nowhere to hide. Gold is the solution. It is the asset that truly diversifies a portfolio, moving independently of stocks and bonds and providing protection when everything else is collapsing. As more financial advisors and institutions recognize this, they will begin incorporating gold into their allocation models. The old 60-40 model will evolve into something like 50/30/20, 50% stocks, 30% bonds, and 20% gold and alternative assets. When that shift occurs, and trillions of institutional dollars begin flowing into gold, its price will surge dramatically. Here's another critical point that few people discuss: governments are trapped by their own debt. They cannot raise interest rates too high without making debt servicing unsustainable, yet they cannot cut spending without risking a recession and political backlash. So what will they do? They will continue printing money and inflating their currencies. This ongoing monetary policy is another powerful force driving gold higher. Governments have no alternative. Printing money is their only way out of the debt trap. As long as they continue this path, gold will keep rising. Look at other nations that followed the same route: Venezuela, Zimbabwe, Argentina. When governments destroy the value of their currencies, gold becomes the one asset that retains value. I'm not saying America will turn into Venezuela, but the trajectory we're on is concerning. You need to protect yourself. You need assets that cannot be printed or inflated away, and that is precisely what gold provides. Let's talk about opportunity cost, because this is critical for every investor. Every dollar sitting idle in cash is losing value daily. Inflation is eroding your purchasing power even if your money earns 1 or 2% in a savings account. The official numbers might say 3 or 4%, but anyone buying groceries or paying rent knows the real rate is much higher. Your cash is melting like an ice cube in the sun. So the question becomes, where do you want your money? Do you want it sitting in a bank account, shrinking in value, or invested in an asset that has preserved wealth for 5,000 years? The answer is clear. The opportunity cost of not owning gold right now is enormous. You're not just missing potential gains, you are actively losing money by keeping it in cash. Now, let's talk about the psychology of this market, because understanding human behavior is essential for making money. Right now, most investors are suffering from what I call recency bias. They remember that gold stagnated for a decade. They remember stocks climbing relentlessly, so they assume that trend will continue. But markets don't operate that way, they move in cycles. We experienced a decade-long cycle where paper assets dominated. Now, we are entering a new cycle where hard, tangible, real assets will reign supreme, and gold is the ultimate king of hard assets. The investors who generate the greatest profits are the ones who recognize a cycle shift before everyone else does. They have the courage to act contrary to the crowd. Today, the crowd is still heavily invested in stocks, still trusting the system, still convinced that everything will remain stable. Meanwhile, the smart money, those who have navigated multiple cycles, are quietly moving into gold. By the time the general public catches on, panics, and rushes for the exits, the price will have already soared. Having invested for decades, I know that the best opportunities often feel uncomfortable. When everyone agrees with you, when everyone is following the same path, that's a warning sign you're likely late to the party. But when people are skeptical, dismissive, or even think you're crazy, that's often a sign that you're ahead of the curve. Right now, if you tell most people to buy gold, they'll look at you like you've lost your mind. That tells me we are still in the early stages. It tells me there is still time to position yourself before the major move occurs. Here's something I find truly fascinating. Do you know how much gold the average American actually owns? Almost none. The typical portfolio has zero exposure to gold. Zero. Most people have their entire net worth tied up in stocks, bonds, real estate, and cash. They have no protection, no insurance. And when markets turn, as they inevitably will, these individuals will be in serious trouble. Don't be one of them. Don't be the person years from now regretting, I should have listened. I should have bought gold when I had the chance. Now, let's address the elephant in the room. Some people say, Kevin, if everything collapses, gold won't matter. You'll need food, water, and weapons, not shiny metal. And yes, if the world reached that extreme point, they would be correct. But let me be clear, we are not headed there. The system is not going to completely collapse. What will happen instead is a reset, a painful, ugly reset where currencies lose value, debts are restructured, and financial hardship spreads. Civilization itself will continue. In that environment, gold is the asset that preserves wealth and ensures you emerge intact on the other side. Throughout history, whenever a monetary reset has occurred, those who owned gold consistently came out ahead. They were able to purchase assets at bargain prices while everyone else was financially ruined. They could rebuild their wealth quickly and efficiently. Gold isn't about preparing for the end of the world, it's about preparing for the end of the current financial system and the start of the next one. That transition will create massive opportunities for those who are positioned correctly. Here's what I foresee happening over the next few years. I see gold breaking through $3,000 an ounce, then $4,000, then $5,000. In a worst-case scenario, it could even reach $10,000 an ounce if things spiral out of control. Some people will say that sounds impossible, that it's crazy. But remember, people said the same thing when gold was $300 and I predicted it would reach $1,000. They laughed, and then it happened. They doubted it at $1,000 when $2,000 seemed impossible, and it happened again. Those who understand monetary history, who understand the consequences of reckless money printing, know there is no upper limit to gold's price. It can rise as high as necessary. The beauty of gold is this: it's not about perfectly timing the market or catching the absolute bottom. It's about exposure. If you buy gold today and it drops 10% before rising, it doesn't matter. Over the long term, you will be fine. But if you wait, if you try to outsmart the market, you could miss the move entirely, and that's a mistake you'll regret for the rest of your life. I also want to touch on legacy, because this is something deeply important to me. I've built wealth. I've created businesses. I've generated significant income. But I also focus on protecting that wealth for my family and for future generations. Gold is a central part of that strategy. It is the asset you can confidently pass down to your children and grandchildren, knowing it will retain its value. You can't make that claim about cash or bonds, but you can make it about gold. Gold has held value for 5,000 years and will continue to do so for the next 5,000 years. If you care about your family's financial future, if you want to leave them something of genuine worth, you need to own gold. You need to educate them about gold. You need to help them understand that real wealth isn't measured by how many dollars are in a bank account. True wealth is measured by owning assets that cannot be created out of thin air, and gold is the ultimate example. Now, let me give you some practical guidance, because I know some of you are thinking, okay Kevin, you've convinced me, I want to buy gold. Where do I start? First, do your research. Understand exactly what you are buying. If you are buying physical gold, only deal with reputable dealers to avoid being scammed. If you're buying an exchange-traded fund, confirm that it actually holds physical gold rather than paper promises or derivatives. If you're investing in mining stocks, examine the balance sheets, evaluate the management team, and assess the assets. Don't just buy any company with gold in its name. Second, start small if needed. You don't have to go all in on the first day. Buy a little, get comfortable, and gradually increase your position over time. This approach, called dollar cost averaging, allows you to build a meaningful position without taking excessive risk all at once. Third, be patient. This is not a get-rich-quick scheme. This is a strategy designed for long-term wealth preservation and wealth growth. You may need to wait months or even years before you see the major payoff. But when that payoff arrives, and it will, you'll be grateful you had the patience to remain committed. Fourth, keep your plans private. Don't broadcast your gold holdings to everyone. Avoid bragging. Don't post it on social media. The fewer people who know you own gold, the better. This is about safeguarding your assets, not showing off. Finally, once you own gold, don't sell out of fear at the first sign of trouble. Gold can be volatile. It may drop 20 or 30% in a short time frame. That's normal, it's part of the process. If you believe in the long-term strategy, if you understand why you own gold, you need the discipline to hold through the fluctuations. The people who profit from gold are those who buy and hold. The people who lose money are the ones who panic and sell at the lows. Let me conclude with this clearly: we are living in a historic moment. We are experiencing a period that will be studied in economics textbooks for the next century. Future generations will ask, how did governments get away with printing so much money? How did people fail to see it coming? The truth is, some people did see it. Some understood what was happening and positioned themselves accordingly. Those people preserved their wealth and came out ahead. I want you to be one of those people. It doesn't matter if you're rich or poor, young or old, experienced or just beginning. Everyone needs to own gold. It is no longer optional. The dangers within the financial system are simply too great to ignore. The risk of currency devaluation is extremely high. The possibility of a major economic crisis is real and looming. You need protection. You need a reliable form of insurance. And gold is the most effective insurance policy you can acquire. Now, I need you to take action immediately. If you found this information valuable, if you grasp the urgency of what I'm explaining, I need you to hit that like button. I need you to share this video with your friends and family, they need to hear this information. And if you haven't already, subscribe to this channel. But don't stop there, make sure to click the notification bell so you are alerted every time I release a new video. I will continue delivering this type of content. I will keep giving you the unvarnished truth about what's happening in the markets and exactly what steps you should take to protect yourself. If you truly want to elevate your investing game, consider becoming a member of this channel. By becoming a member, you gain access to exclusive content. You receive early access to videos and join a community of serious investors all focused on the same mission, building and safeguarding wealth. Your membership supports this channel and enables me to create content without worrying about satisfying advertisers or sponsors. I answer to you, not them. Listen, I've been in this game a long time. I've experienced bull markets and bear markets. I've witnessed economic booms and busts. I've made millions, and I've lost millions. Yet through all of it, one thing has remained constant: gold. Gold has always been there. Gold has always been the foundation. Gold has always been the safe refuge. And right now, as we approach what I believe will be the most volatile financial era of our lifetimes, gold is more crucial than ever. The surge is imminent. The warning signals are visible everywhere. The smart money is already moving and positioning itself. The only question is, will you join them? Will you take steps to safeguard yourself and your family, or will you bury your head in the sand and hope for the best? I know exactly what I'm doing. I'm purchasing gold, and I'm urging everyone who will listen to follow suit. This is your moment. This is your opportunity. Don't let it pass by. Take action today. Acquire some gold. Protect your wealth. Thank you for watching. Thank you for being part of this community. Now, go out there and make it happen. I'm Kevin Alry, and I'll see you in the next video.